Okay, good afternoon, everyone. So my name is Lee Chai, financial analyst and coach from Beyond Insights. Today's topic will be market updates for busy people. So as you can see in the description, get up to date with the stock market before you can even finish your lunch. This session is arranged to provide a short market update for busy people to catch up with the latest events in the stock market, as well as the potential opportunities and risks ahead. We set this session over the lunchtime, hence we will keep it to 20 minutes. Let me start the timer when we start. Whatever we share here today is based on the latest data and also facts. If there is further development, things may change. Do you agree? You may answer yes in the comment section. If you agree that the things may change if there is further development. All right, so let me start the timer as we start. Just before we continue on, just an important note before we proceed. We want to make sure that you know that we are not a licensed investment advisor and we do not manage customer fund. We are educational institution, so our purpose here is to educate people so that you can make your own decisions and be your own investment manager. That way, you have a better control over your decision, hence be able to get better results. If you are looking for stock tips and other kind of tips here, this is not the place for it. All information we share here are meant for educational purposes only and must not be taken as recommendation for buy or sell. Let me proceed. Okay, so we are now at end of June 2023. Let's recap what are the key highlights for the month of June. Number one, the Nasdaq 100, which tracks the tech stocks, and also the S&P 500, which is the stock market indices for the US market, have broken above the one-year high, and they are continuing their uptrend. How many of you here managed to catch a good investment entry or catch a good trade? You may type me in the comment section. Any one of you managed to catch good trades over these past few months? Just type me in the chat. All right, seems that not much of you are catching any good trades. However, it's really plenty of opportunities over the past month in the stock market. Next, we also have the first time the Fed actually paused the rate hike in month of June, and ECB increased their interest rate, and also potential stimulus in China due to the May slowdown in China. So do you think that the first time over the years that a rate pause by the Fed is good for the stock market? If you think it's good for the stock market, you may type yes in the comment section. Next, we have the inflation has been trending down. Over the past years, during 2022, the inflation has been going in an uptrend. And now we are seeing that inflation is coming down, especially in the United States. However, the inflation level still elevated in the UK and also Europe region, which is still at a high level. And lastly, it will be the US stock market recovery. Over the past month, tech stock has been rally, and it has been led by semiconductor, software, and communication industry. Most of these companies are related to AI, which is artificial intelligence, and also PC recovery 2024 themes. Any one of you managed to identify some of these companies? You may answer me in the comment section. What companies that involve in AI and also PC market recovery? So let's move on to the next one, which is the FOMC summary. During the June FOMC, which is the Federal Committee meetings, which they held to decide the monetary policy, let's take a look on their outcome. So number one, before we move on, let's take a look on the positive side of the outcome. The Fed actually keep the interest rate unchanged for month of June, which remain at 5.25%. This is the main purpose for this is to assess the additional information and its implication for monetary policy. So the Fed actually paused the interest rate and want to assess more data, more inflation data in the future to decide the next decision for the monetary policy. And next will be the Fed also see that the jobs data has been robust and also there is low unemployment rate. So based on this, the Fed see the jobs data is healthy and the economy is healthy as well, based on the unemployment rate and also the jobs data. And the Fed also sees potential economic recovery in Q4 2023 and also 2024 economic recovery. You can see that during the past meeting, they actually forecast the year-end 2023 GDP to be 0.4%. And during the latest meeting, during the June meeting, they actually increased the figure to 1%, 1% GDP growth. This means that the US may potentially escape the potential recession. And they also forecast that in 2024, there will be a potential growth of 1.1% in GDP, and 2025 will be 1.8%. So from here, we can see that the Fed actually sees that the economy going to recover in Q4 2023, and it may continue the recovery in 2024 and also 2025. And let's take a look on the negative side of the FOMC outcome. The Fed actually increased its terminal rate to 5.6%. Terminal rate here means the peak rate for the interest rate. And during the meeting, usually the members will vote for the upcoming rate, the forecast. And the dot plot actually shows that it's now at 5.6%, which increased from 5.1% from the previous meeting. And they also said that there will be no rate cut throughout 2023. And in another way of view, the Fed also see that the core inflation still at high level, and they are keen to bring the inflation back down to 2%, which is their target. So they target to bring it down back to 2%, which is the usual Fed target. And lastly, market are factored in potentially 2 more rate hikes from the Fed. And based on the Fed funds future, which is the futures that predict or people forecast what is the Fed likely action, it points to there is potential high probability of rate hike in July. And over the next 4 meetings, they maybe have 2 more rate hikes. And as an investor, we want to focus on the most consistent market or assets when we invest. So to do that, we will gauge the stock market performance. So this is the 10 years performance for the stock market comparing among different markets. So we have Nasdaq 100, we have S&P 500, we have the China index, Shanghai index, and we have the Hang Seng index, and also we have the KLCI. So from here, we can see that the Nasdaq 100, which track the tech stocks, and also the S&P 500, which track the overall United States stock market performance, already recovered more than half of the 2022 drop. And both indices also entered a new bull market, which we can see from the chart, already more than 30% from the bottom. And compared to other stock market, other stock market are still on a downtrend. And for China, the stock market is still going sideways for years already. And for Malaysia, which is the FBM KLCI, still on a downtrend. So any one of you know that why the Malaysia market still on the weak side, on the weaker side? Anyone have any opinions? You may just comment in the comment section. Okay, so to me, the Malaysian stock market likely still weak, likely due to the political instability. We have state election coming soon, and also potentially the weaker ringgit. Weaker ringgit may cause foreign fund to hold on their investment or wait and see until the ringgit recovers. And from here, we can also see that the US market is more predictable and provide more consistent return over the past 10 years and also the average per year return. So why the US market are more consistent and more predictable? Because they have more companies that are well run and profitable, and it's more regulated as well. So what company that are run well in the US that you are known of? You may comment in the chat section. You may comment in the comment section. What are the companies that are well run in the US that you are known of? You may type in the comment section. Yes, Apple. Yeah, Apple, Nvidia, all are great stocks. And despite you see that currently the stock market has been rallied a lot, you may still enter on a pullback if you have a systematic way and a versatile way to trade the stock market. So knowing that the US stock market already in the bull market, what to focus on second half of 2023? Let's take a look on the opportunities first before we move on to the risk. Number one will be the opportunities. We want to focus on industries that are aligned with mega trends. So mega trends like AI, big data, next generation broadband, cashless payment, and also clean energy. Any one of you know the companies that in line with these mega trends? You may comment in the comment section as well. Any companies that you are known of are in line with AI, big data, broadbands, or even cashless payment and clean energy. Yeah, Tesla, yeah, EVs, right? EVs, yeah, AMD, AI chips, all right? So the second opportunity will be PC and also smartphone demand recovery. During the pandemic in 2020, most of the people actually upgrade their laptops and also smartphones when they are working from home. What is the usual cycle that people are willing to upgrade their gadgets? You may answer me in the comment section. What are the usual cycle for people to upgrade their laptops and also like smartphone? 3 years, yes, 3 years to 4 years or even 5 years, right? So if we, let's say, calculate backtrack based on 2020, people are upgrading their laptops and also smartphones. When do you think will be the likely cycle which is coming to upgrade their laptops and also smartphone, which is around 2024 or 2025? So with the opportunities will lie also with the PC and smartphone demand recovery. People are forecasting that the demands will come back in 2024 or 2025 due to the upgrade cycle. And next, the opportunities lies with companies with low debt and low exposure to bond and have high cash flow, strong cash flow. Because during the high interest rate environment, what do you think that people are, if let's say companies are having a lot of loans, do you think that they need to pay a lot of interest? Because the cost of the loan has been going up. So in order to prevent this situation, it's better to focus on companies with low debt, low exposure to bonds, and also with strong cash flow. And also focus on companies less vulnerable to tightening of consumer spending. As we can see, even though the Fed said that year-end it may recover and potentially US may escape the recession, however, there are still people that might already lost their job or still are on the tightening their spending, may reduce their spending on consumer spending. And lastly, the travel and retail sectors actually show reversal. But for this sector, be cautioned because they are discretionary spending, which means that people may cut their travel budget or spend less on discretionary items if there are potential recession. Especially if, let's say, China slow down, they may slow down the US recovery as well, which I will explain more in the negative section. Okay, so for the risk, if let's say the high interest rate prolong, which I shared earlier, Fed may not going to cut the interest rate throughout the 2023. It may impact the affordability. People may cut their spendings, and bond market will be at risk as well. And also housing market will be at risk as well. If let's say the high interest rate prolong. For this section, it's better to prevent those companies with high risk of bond market risk or housing market risk. For example, companies from the financial sector like banks, and other companies that are providing a lot of loans, especially exposed to the housing market and also bond market. And also geopolitical tensions. The geopolitical tension in Ukraine and also Russia likely to be continues on. And also China and US potentially will carry on with their tech war. For this section, it's better to avoid companies with huge China market exposure or huge Taiwan exposure. And lastly will be the slowing consumer spending. Based on the May data, it showed that the recovery in China actually is slower compared to the US. And based on their inflation data and also based on their job unemployment data, it's actually not doing well. So if China not able to recover or having a slow recovery, it may drag the recovery in the United States because China are the number 3 consumer spending market in the world, ranked number 3 in the consumer market. From here, we can see that based on the charts and also the opportunities and risks I shared with you, with this comparison, we can see that the opportunities actually outweigh the risk. It's a good time to actually capitalize on the opportunities and also take advantage of the stock market recovery. Because from here, we can see that all these mega trends are to stay, because upcoming, for example, like AI will be the future. Clean energy also have a huge potential growth because of different country actually pushing the clean energy policies. And in 2024 and 2025, PC and smartphone demand may recover as well, because based on the usual upgrade cycles, people may start to upgrade their laptops and also smartphones after 4 to 5 years. Even though potentially there will be slowdown in consumer spending, however, people may just postpone it to another 1 or 2 years. So the recovery is near. However, to do that, you may need to equip yourself with a systematic, versatile, and also safe way to do so. And also you need to factor in or plan in some time that you may need some time to practice and also pick up the skill set. And the stock market usually moves 6 to 9 months ahead of the economy. And I already shared you that even the Fed also forecast that the economy will recover potentially will recover in Q4 2023 and continue on in 2024 and also 2025. And the stock market is 6 to 9 months ahead of the economy, as I mentioned earlier. So now will be the best time for you to learn and also practice and also capitalize on the continuation of the recovery after you have familiarized with the skill set. And since this is just a 20 minutes market update, we would like to invite you to a free 3-hour webinar that covers the framework on how to approach the stock market in a systematic, versatile, and safe way. And the next available webinar will be 7:30 p.m. tonight. And if let's say you couldn't make it tonight at 7:30 p.m., you may join us during the next session, which is 8th of July, 9:30 a.m. You may scan the QR code to register. While we are waiting while you are scanning the QR code, I may open the session for a 1-minute Q&A. So anyone of you have any questions regarding the stock market update just now or the opportunities and risks I shared earlier, you may type in the comment section. Okay, so I see one question from Joey. So market may have factored in the risk mentioned already. Okay, so based on the risk I shared here, high interest rate, people may already forecast the high interest rate may carry on throughout 2023. And you can see that based on the charts, the funds are actually going into the tech companies with the industry themes or catalysts. For example, like mega trends, AI. There are actual demands for the AI chip. Hence, you can see that all the companies involving AI has been rallied during first half of 2023. And market, even though we still have geopolitical tension in the European region like Ukraine and Russia and also China and US, the market may have already factored in during the last year's drop in 2022. Okay, so any more questions regarding the stock market update? Okay, do you think that AI craze is a bubble that will burst? Okay, in fact, the AI actually based on actual demands and is an actual technology breakthrough recently, especially on the generative AI like ChatGPT, and also in other companies like you can see Adobe also doing their own Firefly system, which is a designing AI tools. Based on this, there will be a huge demand in terms of computing power to train this AI or to host this AI. And also there will be huge demand for data center as well, and also cloud computing services as well. Because if let's say the AI market grows, the demand grows, all these infrastructure, all these service providers like data center, cloud computing companies will need more computer hardware to host these AI sites and also AI services. And also at the same time, in order to train the AI or process the high performance data, high volume of data, you actually need high performance computing chips, which currently NVIDIA is the leader, and based on their latest earnings, also the CEO says that the demand is high. So to me, this will be likely a actual growth with the real demand to support it, rather than it's a bubble. However, over time, you may need to continue to monitor as the market going too hot on the AI themes, it may become a bubble. However, for now, it's still based on the actual demands and also technology breakthrough. With that, I think we are hit the 20 minutes mark already with some additional time spent on the Q&A. I hope that you enjoyed the 20 minutes update to help you to catch up on what is the latest development in the stock market, which I covered earlier on, and what are the opportunities and also risks ahead. So if let's say you are interested in investing in the stock market, you can scan the QR code and attend the free webinar I mentioned earlier. Thank you.